Is it more disappointing today that we're back at 2000? Maybe we'll finish under, maybe we'll finish all those things, but nothing has changed. And what I think, what's really the good news on that spike, that the Chinese, remember now, gold is shifting. It's not being dominated in Europe and New York anymore. It's moving to the Far East. And the formation of the BRICS is one of the main reasons for that. Yeah, we might get disappointed. It may take a few weeks or even a few months to get back to that level. But I think it's an indication of things to come. So I actually, short-term negative, if you want to call that, but long-term, real positive what happened. We are going to be in a battle. Days like today are going to happen, and it's going to be a battle all the way to $2,500 on gold.
As observed on the daily chart, gold price closed Monday below the day's simple moving average at $2,006, following a breakdown from the ascending trendline support of $2,024 on Friday. Peter Grandich from Peter Grandich and Company believes gold is on its way to $2,500, but it will be an arm wrestling match between the bulls and bears. Despite possible short-term setbacks, Peter observes a favorable trend in gold's movement toward the Far East, with China's interest as a significant indicator. Looking ahead to 2024, analysts at the World Gold Council have outlined 3 potential scenarios influencing gold prices. Joseph Cavatoni, the North American market strategist at WGC, highlighted in a recent interview with Kitco News that the Federal Reserve and its potential rate cuts will play a crucial role in shaping the trajectory of gold. Peter's analysis highlights that from January 1, 2000, gold surged by 693%, outpacing the Dow Jones Industrial Average, which saw a 163% increase. Even factoring in dividends reinvested in Dow stocks, gold proved a more lucrative investment. Additionally, using an initial gold price of $35 and a Q1 2022 price of $2,000 per ounce, gold's appreciation from 1971 to Q1 2022 is approximately 5,700%, surpassing the Dow's 4,500% appreciation during the same period. Peter highlights increased gold use by BRICS, citing currency swaps and notable shifts from the US dollar by major oil producers. He foresees these trends as pivotal for a positive gold market in the upcoming year. Additionally, central bank gold demand has transformed the marketplace, with near-record levels expected in 2023, contrary to earlier projections by the World Gold Council. Before diving into Peter Grandich's insightful interview, subscribe to our channel and give this video a big thumbs up.
Since January 1, 2000 to a week ago, that's when I had it charted for, gold is up 693%. The Dow Jones Industrial Average, because when everybody talks what does stock market do today, they quote the Dow. The Dow was up 263%. And even if you take what the dividends that you would have generated by owning the Dow and reinvest it into more Dow stocks, it still underperformed gold. And I'm telling you this much, I take everything I have and risk this, Elijah. If we polled 100 of those financial advisors in the business only from January 1st, 2000 and on, and said this question to them, what has performed better since January 1, 2000, gold or Dow? They go, that's stock market. Are you crazy, sir? That's exactly what they would say. And nothing is further from the truth. And you probably have some people that have owned gold for maybe as long as that. And they think somehow that their stock market friends are killing them. But when in the reality is, they're not. But we're never going to get, and it's very important for your viewers and mine who tune into this, to understand you're never going to get general financial advisor community supporting gold in a big way because it flies in the face of what they make their living off, and that's selling financial assets. So, yeah, is it more disappointing? Yes. Is it more disappointing today that we're back at 2000? Maybe we'll finish under, maybe we'll finish all those things, but nothing has changed. And what I think, what's really the good news on that spike, that the Chinese, remember now, gold is shifting. It's not being dominated in Europe and New York anymore. It's moving to the Far East. And the formation of the BRICS is one of the main reasons for that. The very fact that the Chinese were that interested and that appetite at that level tells me that, yeah, we might get disappointed. It may take a few weeks or even a few months to get back to that level. but I think it's an indication of things to come. So I actually, short term negative, if you want to call that, but long term, real positive what happened. And for over 2 years, we've made just a series of higher lows. And I can tell you at each low, if we took the commentary on gold at those dates, they would all be the same than ones we're going to hear today. More disappointment in the gold market today when the dollar rallied and blah, 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 blah. But despite all this, it is climbing higher and in a pattern that fits a chart that you and I have talked about, and we're not alone in this. I think that one of two of the best bullish patterns you can have, and that's called a cup and handle. And this is only solidifying it and making it stronger. And so when I tie that into the fundamentals and understand what's happening with the BRICS, how they're moving towards using gold in some form, sometime down the road, facilitate with however they're going to structure their trading. Right now, we already know that, A, they're swapping currencies, and I don't want to take away any questions. A significant oil producer saying, I'm not even going to take the dollar anymore. All these things are playing into what I think will give us the type of year that we even the don't worry, be happy crowd will have to go take notice, and that would be next year. As you know, I wrote earlier this week that we are going to be in a battle. Days like today are going to happen, and it's going to be a battle all the way to $2,500 on gold.
Peter emphasizes the concerning path of the United States budget deficit and escalating debt, reaching unprecedented levels and causing apprehension about servicing such debt, especially considering the substantial gap between interest payments and tax revenue. With the U.S. holding $33.2 trillion in government debt, over a third of the global total, servicing this debt now consumes 20% of government spending. It is projected to exceed $1 trillion by 2028, surpassing defense spending. Additionally, Peter notes that the situation is compounded by student loans, which constitute the nation's largest asset. More than a year after President Joe Biden first tried to make good on a campaign promise to cancel student loan debt, the final contours of his second attempt should become clear this week. Peter asserts that the media tends to exhibit an overly positive outlook within the broader context of economic challenges, particularly in financial matters, as their revenue is derived from advertisements. According to Peter, this bias impedes fair discussions about topics such as gold versus conventional investments. Let's get back to the interview.
Listen, there's a handful that's tied to the gold community. So they're going to always put things into a gold positive frame most times. Well, multiply that by 10,000 and then you get the financial media. You know, I don't expect on the financial networks now, each one of them has a significant advertising community for cryptocurrencies. So I don't expect to turn on any of those stations now and hear anything really negative about it. It'd be like me picking up Money Magazine and reading an article, you should sell mutual funds. It's just not going to happen. So that financial media that you speak of is really, I always like to use the terminology, they're tied to the hips of what I call the Don't Worry, Be Happy crowd. And the Don't Worry, Be Happy crowd is just heavily tilted to being bullish, seeing the cup half full, whether you like it or not. And I always say this, and it's from personal experience. It's how I gained my fame back in '87 when I was a head of investment strategy, forecast the crash. The firm wanted me to retract it. And the chairman said, you can never make a living doing that on Wall Street. You make a living by people, being bullish on stocks. And he was right. So I really expect that even if the Archangel Gabriel came to the top 5 market strategists over the weekend, Elijah, and said, I'm here from God. There's going to be a crash on Tuesday. Get everybody out on Monday. Even if they went down to their office, believing the angel visited them, their firm would now allow them to say that. So if that is true, which I believe it is, and they are tilted one way, how are they going to get behind gold and start talking about all the things you and I are going to talk about? Who would want to own stocks or maybe even bonds after that discussion? And we're now in free fall, in a sense, in terms of caring or recognizing it, to the point where we now have multi-trillion-dollar budget deficits, yearly deficits. Not when I started, there was less than $1 trillion in long-term debt. It can't be sustainable. The Congressional Budget Office, and again, I hammered this home, and if people want to look it up, just put it in Google, Congressional Budget Office, earlier this year, put out a warning based on what they were seeing then, that in less than 10 years, the United States would have $50 trillion, and that would be almost impossible to finance the interest payments, given what the expectations on what average interest rates should be, and what would then we still need after that just to maintain the country, to pay, the army or whatever the case may be. Well, since that time, there's been an acceleration on the amount of debt. In fact, it increased $600 billion more than we expected in 2023. And therefore, they now have talked about lowering that target to as soon as between 6 and 7 years. Well, Elijah, I feel certainly the clients I deal with, almost certain most of our listeners, please God, are going to be alive 6 to 7 years from now. This is now something that's within reach. See, people say, them gold guys been telling us for 20-something years about debt and all that. And you're right. There was, because it was only $1 trillion, then it was $5 trillion. But now we're at a level where anybody with a rightful mind and being fair and honest can say, wait a minute, 50 trillion, 5% interest, that's $2.5 trillion in interest. We're going to have to pay it. We only took in $5 trillion last year, best year ever of tax revenue in the U.S. How do we pay everything else with just $2.5 trillion? And by the way, most Americans don't know this. What's America's biggest asset it has on its books? People are shocked when they learn that. I think you know the answer. It's student loans. That's the single biggest asset the United States carries. And we got a guy in that's there now. He just forgave another 20, 50 billion of it. I mean, if it wasn't so frightening and scareful, I would just laugh as kind of the laugh I had, but it's really concerning.
The precious metal sticks to its modest intraday gains heading into the European session, albeit lacks bullish conviction and remains well below the $2,000 psychological mark. Will the precious metal overcome its current hesitation and breach the significant $2,000 psychological threshold in the upcoming European session? Or will it exhibit a lack of bullish momentum? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.